Joining me now to talk more about the possibility of government intervention or regulation, what it may mean for the subprime market and mortgage holders. Peter Cohen, president of Peter Cohen Associates, along with John Sauro, president of North Atlantic Mortgage Corporation. Gentlemen, always nice to have you on the program. Welcome back.
Thank you, Maria.
You know, part of the issue here is the fact that we had all of these non-banks, these lenders coming on the market that weren't regulated by the typical regulators looking at the major financial services companies. And as a result, it was sort of money gone wild. Isn't that true, Peter?
Absolutely. I mean, Maria, there are something like 47% of those subprime mortgages are liar loans. The people did not disclose their incomes. I mean, how can you trust a loan if you don't know how much the person is going to have to pay it back?
Right, the no-doc, right? I mean,
Yes.
you had no-doc loans. You didn't have to even provide any documentation. You didn't even have to have the job.
I mean, the basic concept of credit is that you believe the person and you verify the person. And there's no verification if they don't have to provide documentation of their income.
John, let me ask you this about American Home Mortgage filing for bankruptcy today. Does that tell us anything about the rest of the industry? Are we going to see further fallout now that we know that American Mortgage is in Chapter 11?
Maria, I think we'll see some further fallout. I think it's contained, however. And one thing that we need to note is that any government intervention at this time is only going to eliminate the very loans that is responsible for the record home ownership that this country enjoys. And I believe that this is just a hiccup in the overall credit markets. And once they climb over this wall of worry, a lot of these problems will be resolved. Let's note that many of the loans that the secondary market have stopped buying right now will return with more protective underwriting guidelines on them. And these credit markets need to resolve this problem on their own. I don't believe that government intervention is the answer.
So you're saying you don't think the government should come in and start making lending a lot stricter, cutting some people off, even if those people really should not be in the market to be taking out a mortgage because we know that they're incapable of actually paying it?
I think the markets are going to do that on their own. As a matter of fact, the markets have already started doing that. You know, I agree with Peter. Some of these no-income check loans, they've really gone out on a limb. A lot of the lenders out there have really gone too far and been too lax with their underwriting guidelines, and I've been saying that for years. And I think you're still going to have the no-doc loans, but I think that the secondary market is going to put restrictions on who's going to get a no-doc loan. I mean, if we go back, say, 10 years, no-doc loans did exist. Greenpoint Mortgage was one of the big holders of no-doc loans for many years,
right.
And they've done fine.
Well, what about that, Peter? I mean, should government step in? The bottom line, I mean, you know, John is saying that, you know, government should not be stepping in and let the market take care of itself. Yeah, the market's taking care of itself, all right. And here we are in this position where we've got major volatility, the hedge funds at Bear Stearns worthless, and ripple effects all over Wall Street.
That's exactly the problem. As long as Wall Street and the people who are making money on these deals pay all the costs, that's great, but it's not going to happen that way. Because what's going to happen is that there's an alphabet soup of blood out there. There's the CMOs, the CLOs, all these different mortgages and securitized items out there, and people are beginning to worry because they can't value them. And we don't know where in the world the owners of these securities are and how much they're going to have to write down their portfolios and how much the repercussions of this are going to be. People thought that these assets were diversified and not correlated, but in fact they're very tightly correlated during a crisis. And that's the real problem, is how much society will end up having to pay for this mess.
Are we in a crisis?
I think we are in a crisis, except it's happening in slow motion, and we don't have enough disclosure of it.
Maria, if I may, and I agree with some of what Peter's saying. I agree with the fact that what he's getting at is a lot of the problem out there is not quantified yet. We really don't know the total extent of this as of yet. But I think that there's a lot of, you know, wild and irresponsible speculation out there in the media right now, which is only spurring this on even more within the markets.
All right, we'll leave it there, gentlemen. Nice to have you on the program. Thanks so much.
Thank you.
We'll see you soon.